Happy New Year's, everybody. To kind of just give you a little bit of an intro to me. I've been working here at MetaStock for 20 years. I love my job, get involved in a lot of fun projects, and I've actually, in March, I'll finish up 21 years here at the company, and it's been great. It's been a lot of fun, and I do a lot of fun things here. So that's enough about me. Today, what I want to do is talk a little bit about one of my favorite trading methods that's included with MetaStock, and let's go ahead and get started. I did ask Renee to turn on the questions for me. So if you have questions as we're going, please let me know. I'll ask you to look at some, if you guys want to look at some of your symbols as we go, and we'll try and keep this a non-canned power presentation. I don't like to spend a lot of time in PowerPoint. I think it's a very, very boring format. So if we will try and keep this as interactive as possible. I have a question for you, though, any of you that happen to be using MetaStock, will you just go ahead and let me know by typing in the chat box right now? Let's go ahead and read, probably that'll be your favorite part today, my legal disclaimer. Today's demonstration is designed to instruct you on using MetaStock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. Give me just a half a second here. I've decided to change to a microphone that I think you'll be able to hear me better. So there you go. That was it. It looks like this microphone is working better, and you should be able to hear me better as well. There's about 3 of them I can choose from in here. I like to have the one on my head because it allows me to actually move around a little bit, and I have a tendency to do that. Let's talk a little bit about MetaStock again. I don't have a lot of PowerPoints in here, but I do want to tell you a little bit about the company. It's a company that's been involved in creating software since 1982. And there's some bullet points that are up on the screen. One of the things that I like to kind of point out is it's a fairly flexible platform. It's been rated #1 as a software package in Technical Analysis of Stocks and Commodities magazine for 23 or 24 years in a row. I have it on the next slide. And it does quite a few things. Anyway, I hope you had a chance to read the bullet points because I'm not going to. We're going to talk very specifically about one method available in the program today, and it's one that I like to talk about. I'll talk about why I like to talk about it. But MetaStock, in case you're not familiar with it, is a very, very big toolbox. And we certainly are not going to talk about all of it today. I just want you to understand we're getting very, very, we're going to kind of zoom in and talk about just really, really specific things that that I believe will be helpful for you. But to kind of give you an idea, MetaStock can scan markets. We cover about 200 global exchanges. So if you're interested in stuff that's here in the US or in London or in Asia or whatever the markets might be, you can actually scan through, open up charts, look at them, find opportunities that exist today. It does have an incredible backtester in it if you're interested in doing historical backtesting. There's some reasons, and I won't kind of get into the woods too deep with it, that I believe we offer one of the best backtesters that's available in the market. We also have the ability to statistically forecast price action, and of course you can get real-time alerts, you can get commentaries, which are very, very cool, and signals. So we are going to offer you the ability to try out MetaStock today. For $20 a month for 3 months. The starting price for MetaStock is $59 per month. You can get an extended trial where you can try it for basically 3 months for $60. And to do that, there's a little thing on the screen there, metastock.com/LP. Okay. So today what I'm going to talk about is 3 steps to a successful trade. More specifically, I'm going to talk about the Rahul Mohinder oscillator method. And to kind of set the stage for what we're going to be talking about, the RMO method is a trend following system. So I'm sure you've all heard like the trend is your friend, or befriend the trend, or a rising tide lifts all boats, that kind of stuff. RMO is very much something that's designed to help you take advantage of, let's say, the major market trend. So it's a minor and intermediate market trend. Okay, RMO is put together by a friend of mine, Rahul Mohinder. And you may not be familiar with Rahul Mohinder, but he is a very, very good partner of ours. And so to kind of give you an idea of who he is, he's been a dealer of MetaStock or a partner of MetaStock in India since before I started working at MetaStock. So more than 21 years at this point. And he's one of our most valuable partners. His main business in India is he teaches people how to trade. He does a lot of panelists on CNBC and CNN India. He has about 5 offices, I believe, in India. And he does a really, really good job. What he does is he brings people in India how to trade, and he teaches them very, very specifically how to trade. It's a bit of an interesting story, at least for me, on how this method kind of came to be in MetaStock. But about what it was is he was in our office, and this was probably about 12 or 15 years ago at this point. And we asked him to actually show us exactly what he does. In other words, what he teaches his students how to trade in India. And the method he showed us is the one I'm going to show you today. We obviously liked it. What we decided to do is we actually purchased rights from him for the RMO, and we started including it in every version of MetaStock that we sold. Subsequent to that, I've taught this particular class probably just shy of 7 billion times. And I've also, it's a method that I still use to trade personally to this very day. It's a very, very good method. There's a reason I like to show it. Actually, there's several reasons that I like to show it on the chart. Mostly, it kind of boils down to the fact that it's easy. It's 100% objective. In other words, it's not subjective. We're not going to be trying to make decisions on, who the president is and what's happening in the country. What we're going to be doing is, and maybe what the QE4 looks like, or what type of quantitative easing or what the market looks like. What we're going to be doing is we're going to be looking at the trend and making decisions based on what the market's actually doing, not what we think it's going to do. I also like it because it employs solid money management. It works on many different instruments and you can apply it on all time frames. But I like it on many different instruments because I've literally shown this in London on London stocks, or in Egypt on Egyptian stocks, or in Saudi Arabia on Saudi stocks, or Australia on Australian stocks. I've shown it all over the place. And it doesn't work on every instrument. Nothing does. But it's a very, very great system that you can pair up with just about any instrument that's actually trending. And by the way, if you haven't noticed, we've been in a fairly large trend for a while. And it's also a simple 3-step process. Bill, yes, thank you for a question. Yes, you can use it on futures and Forex as well. In fact, we can look at a few instruments if we have time on futures and Forex markets. So let's go ahead and talk a little bit about the steps of it. So again, with this thing, what we want to do is we want to trade with the trend. And we want to do it in a way that's objective. We don't want to be trying to make decisions around that. And so the first thing that we want to do, it's a 3-step process. I'm going to walk you through every single step. But the first thing that we want to do is we want to identify the primary or the prevailing trend. And I'm going to ask the audience now, we're going to go ahead and switch into MetaStock. I'm going to show you how that works. But are there particular symbols you'd like to look at? I don't like to kind of keep this a canned presentation. I want to see if there's things that you guys want to look at. If you do, send me a symbol and we'll go ahead and kind of plug it in. And I know it's been a long day for you. So go ahead and type in your symbols if you want to. Right now we're looking at the methodology on the Dow Industrial Average. Okay. All right, very cool. I don't see a lot of symbols coming in. Oh, thank you, Michael. We do have one symbol. We do have a couple of questions as well. MON, okay. Michael came in with a couple of things. Keshav says, does MetaStock have market profile, volume profile, and footprints for stocks and ETFs? We do have market profile and volume profile, but we only have those in our real-time application. Okay. So now I am getting some signals. You guys woke up. You're like, okay, this is gonna be work. This is gonna be interesting. So INCY came in, MON, and Q, Canadian dollar, and quite a few more, USO. Okay. Now what I'm gonna do is we probably won't have a lot of chance to look at all of these. So I'm gonna just basically open up the first four that I wrote down there. And I'm going to teach you basically on one of these four instruments exactly how that works. So I'm going to go open up what we call our power console in MetaStock. That's this little doohickey here. And from here, I can do charting, I can do scanning, I can do system testing, and I can even do market forecasting. Okay. So obviously what we want to do is we want to look at some charts. Okay. And what I'm going to do here is I'm going to type in some of the symbols that you guys have put in here. Okay. Now, there's a couple of things that we can kind of do, and I'm not going to kind of go too deep into this, but we do have lists of all the symbols, and you'll notice we have lists of Asia, Europe, Middle East, Africa, North and South America. And you can drill down into these and kind of say, well, I want an ETF, and let's look at ETF stocks. But since I know exactly the symbols that I want to follow, I'm just going to type them up here in this center bar right here. So the symbols that were requested was MON, INCY, which I'm going to try with a .o, which will give me the whole NASDAQ consolidated market. We'll do NQ, which is a futures contract. So I'm actually going to do a continuous contract for that. And we'll do CAD, Canadian US dollar, which is CAD equals in terms of Reuters, and then USO. Okay. Now I want to open these up with a very specific template. That would be the RMO template. So what I'm going to do is right here where it says apply template, I'm going to change this from smart chart. And what I'm going to do is I'm going to find the RMO trade model on my list, which is right here. Okay. So if for those of you that said you had MetaStock earlier, this is the template that you're going to apply to it. I'm going to go ahead and click on open chart, and we'll see it's going to go ahead and grab those charts for me. And basically what I'm going to do is let's kind of take a look at these real quick. And that's a lot. I kind of bit off a little bit more than I could chew. But let's go ahead. Monsanto looked fine. What did it? There it is. Okay, so what I'm going to do is we'll go ahead and start with Monsanto. And I'm just going to reposition the chart. It kind of got a little bit funky on this display, which isn't common, but it did happen. So I'm going to reposition kind of the indicators in the chart so we can kind of see them a bit clearer and so we can see everything. Okay. Now, again, what we want to do kind of in our first part of this is we want to kind of identify the primary trend. Okay. We're going to look at basically a three-step process. Step one for us is we're going to identify kind of the primary or the prevailing trend. And what we do for that is we use this very top oscillator here. It's called the Rahul Mohinder oscillator. This is what helps us identify the primary trend. I'm going to go ahead and make it full screen for you so you guys can kind of get an idea of how it looks. Basically, kind of what this oscillator will do is if the stock's trending up, it's going to kind of go up. If it's trending down, it's going to go down. And the way that you read it is actually really, really simple. Basically, if it's above the zero line, like it just went above the zero line today, if it's above the zero line, basically we're going to say that the primary trend or the long-term trend is bullish. Okay, so what does that mean? Okay, well, if we're in a bullish primary trend, we want to trade with the trend. Number one, it means that we're allowed to bias this security at this point. Okay, allowed to being the important word. We don't actually take a trade yet. We want to kind of take a look and kind of see if this is. There's two other steps basically after we're done with this. So if it's bullish, so basically what we're allowed to do is we're allowed to kind of look at it. We on a long-term basis are going to be bullish about Monsanto at this particular time. And the other thing that we're not allowed to do is we're not allowed to short the security. So it's fairly simple in terms of the way that it's kind of put together. Very, very visually, I can see that it just went up above that zero line that I drew on the chart today. You can also take a look at the kind of the ribbon at the bottom, and you'll see that the RMO is either bullish by looking at this ribbon or bearish. It'll either be green or red, indicating that it's bullish or bearish, okay? So just to reiterate that rule, again, it's very simple. If your RMO is bullish, you're allowed to buy, you're not allowed to short. And again, it's not a trigger to go ahead and get into the market. That's it, okay? If it's bearish, obviously you reverse the rules. If it's in a bearish zone, you're allowed to short. You're not allowed to buy because you don't want to buy again, or you don't want to buy into weakness on the overall trend, and it's still not a trigger to enter, okay? Any questions so far? Let me know if you have questions. This should be very, very straightforward. If you don't understand what I'm talking about, I am failing in terms of explaining it to you properly. So please let me know if you do have questions. Now, obviously, so Monsanto, we'll just recap. Long term, it's bullish, okay? What does that mean? It means we're allowed to buy, means we're not allowed to short, period. That's simple, okay? The next thing that we're gonna do with this, again, it's a very kind of pretty simple three-step process. But step two is what we're gonna do is we're gonna look at the shorter term trend. We call it the primary trend, but it's really the long-term trend, okay? The short-term trend is what we're gonna look at, and we wanna make sure that matches up, okay? And very simple, to look at the intermediate term trend and the short-term trend, we're gonna be looking at what are called the swing trade number 2 and swing trade number 3 indicators. The short-term trend is this pink indicator. The medium-term trend is this blue indicator. Right now, I want you to focus on the pink indicator. I do prefer to view this in a slightly different way. And I'm gonna just make a little bit of a change to the chart because personal preferences and all. But what I like to look at this medium-term trend in terms of not a histogram, but a line. And you might kind of figure out why I like to do that. But in order to do that, in MetaStock, all I do is highlight the line that I want to change. I change that to a line, and now what I'm seeing is the medium trend is actually in blue. The short-term trend, which is what we're going to talk about for step number 2, is actually in the pink color, okay? Now you'll notice that the RMO, or the swing trade top number 2 is very, very similar in terms of the way that it looks and the way that it kind of acts compared to the primary trend. The calculations, I believe, not 100% sure about this, but I believe the calculations are the same. We also evaluate it the same way. What we're looking at is we're looking for weakness or strength, okay? It is a little bit faster to move up and down above and below 0 because you're looking at a shorter time frame. Obviously, if you're looking at a longer time frame, your indicators kind of smooth out over time. With this one, what we're doing is we're looking at a short-term time frame. So if we're kind of focused right into this last 3 days, I'll say, of Monsanto's chart, what we're going to notice is it just went from being below 0 to above 0, meaning right now you're in a bullish short-term trend. So long-term, we're bullish on this stock, as well as short-term, we're also bullish on this chart. And one of the other ways that you can read this, you can look at the pink indicator and you can see very easily if it's above 0 or below 0. But the other way that we kind of identify that on the chart is as long as that short-term trend is above 0, you're going to see your bars painted blue on the chart. I'm going to just zoom in a little bit so you can kind of see a bit of a clearer image on the chart. But what you'll see is for the last 3 days, our short-term trend has been bullish, okay? So long-term, we're bullish. Short-term, we've been bullish for about 3 days, okay? This is actually triggering a trade today, which is kind of interesting. I can kind of show you on right now how, and again, it's not a recommendation to buy Monsanto tomorrow, but it did trigger a trade. So I can kind of show you how Rahul would recommend that you kind of structure a trade around the RMO method, okay? All right, let's go back into the rules. I just do this so I kind of don't make mistakes. When we're identifying kind of what the short-term trend is doing, we want to make sure that it matches up with the primary trend. In other words, if they're both bullish, then we're allowed to buy. We're still not allowed to short, and it's not a trigger. If they're both bearish, you're allowed to short, you're not allowed to buy, and it's still not a trigger. Step number 3 is actually the trigger to go ahead and get into the marketplace, okay? If they don't match, like the primary trend and the short-term trend don't match, if we were looking at Monsanto yesterday, they didn't match. The primary trend was bearish, while the long-term trend or the short-term trend was bearish. If they don't match, we're not going to trade. Again, what we want to do is we want to trade in conjunction with the trend. And following these rules is going to be helpful for us to kind of identify what that trend is in a way that's objective. And we just want to wait for them to match. If we're looking at it yesterday, it only took one day for it to actually match up. And what we want to be able to do is put the odds in our favor when we do take that trade. Okay. In this case, they match, which is kind of cool. They don't normally match, so I usually kind of go to a past example, which I'm going to need to do anyway to kind of show you how to set up the trigger. So once they kind of match, what we want to do is we want to identify exactly where the trigger point is. And so let me talk a little bit about how that works. And if you have any questions, please ask them. I think I'm supposed to go to about 2:15. So I need to kind of make sure that I stay on pace here. And if that's wrong, Renee, just chat and let me know. I can talk for as long as I want to be frank. Okay, so if we're looking here at USO again, bullish long term, okay, bullish short term, okay. So how do we get the triggers? And to do that, what we're going to do is we're going to look at swing trade number 2 and swing trade number 3 again, okay. And to remind you, the swing trade number 2 is the pink line. It's the short-term trend. The swing trade number 3 is the blue line. It's the medium-term trend, okay? Now, this is where it gets a little bit different, because with the swing trade number 3, we're not going to be looking for that to be above 0 or below 0. What we're actually going to be looking at is when our trend starts to go up fast enough that it crosses up above the medium-term trend. And let me rephrase that in a way that kind of makes more sense, okay? If we look like several days ago on the chart, we were our short-term trend in relationship to its medium-term trend was kind of going down, right? Then it kind of bottomed out. It started to kind of come up, and right here, the short-term trend actually crossed up above the blue line or the medium-term trend. It happened between this bar and this bar. Okay, so it happened realistically right here to kind of make it as specific as I can. And what this kind of tells you is that short term, at least, the momentum is picking up. It's picked up enough that to the long side that it's given what Rahul calls this cross a change of momentum or a change of direction or a change of force. Okay. So as long as that exists on your chart and you've got a bullish trend and you've got a primary and short-term trend, you can actually take a trade, okay? In this case, when it actually happened, and when it does happen, you're gonna see that MetaStock will automatically paint a buy signal on the chart for you. But if we're looking at Monsanto several days ago, we wouldn't have bought on this signal because right now, at that point, we're bearish long-term and we're bearish short-term. We want the market to kind of set up for a primary bullish trend, and we want it to give us some sign of bullishness that it's going to kind of continue to go up, okay? And so here we have the change of momentum. We could have started to watch the stock then. A few days later, and this would have been Friday, I think, 1/5, yeah, sometime last week. 1/5 was Friday, good guess. Our short-term trend went above 0. It's continuing to climb up a little bit. And today, we have everything kind of lining up. So in this particular case, we're bullish long-term, we're bullish short-term, and we have that change of momentum or change of force. Now we can kind of set up and structure a trade, okay? How do you do that? So again, now we're waiting for for something else to happen entirely. We wouldn't buy today. What we're looking for, well, let me tell you what we're looking for. Once everything lines up, I'm going to take the horizontal line tool in MetaStock, which is right here. I'm going to take a look at the highest value for today and the highest value for yesterday. And you can do this on intraday bars as well. You just use bars instead of days, okay? What I'm going to do, out of those two bars, this is the higher value, okay? And what I'm going to do is I'm going to put a line, just a little bit of white space. I'm going to leave a little bit of white space. I'm going to put a horizontal line right on the chart. I put it exactly right here, okay? I'm going to do that again, only this time what I'm going to do is I'm going to look for a recent kind of support level. And generally what I kind of look for, there's a couple of ways Rahul teaches this. So one thing that you can do is you can put a line right below your lows for the last 2 days, or the lowest value for the last 2 days, which would put your value right here, okay? But what I'm actually going to do, and the way I prefer it to do it, is the way that Rahul teaches it in terms of the other direction. What I'll be looking for is kind of a bit of a recent low, okay? And in that case, I'm going to look at this low that kind of happened right after our buy signal. I'm going to put my stop, or basically my second horizontal line, which I kind of spilled the beans, is going to be my stop loss right below this low, okay? So now what we're waiting for is Rahul likes an additional confirmation that this thing is going to start to go up. And the way he kind of does that is he wants it to kind of penetrate this bar's high. So if tomorrow or the next day or the day after that, or it kind of comes up above and trades above kind of this line that we've drawn in the chart, we're going to go long as close to that line as we can. And what I mean by that is if we open up tomorrow and then let's say the line's at 119, but let's say it opens up at 121, let's say there's an overnight gap, we'll go ahead and buy on that 121 price, okay? Likewise, if it kind of opens up below this point and kind of spends a week or so, kind of not breaking this high that it set many times, you'll notice this high has been set quite a few times. If it doesn't break this high, then it's not kind of breaking out anyway, and we're gonna wait until it does or until this thing goes bearish again. We want that additional confirmation that Monsanto's about to make a move up, okay? So when it does cross above this line at 119.72, 119.72, I wrote it down, don't know why I wrote it down, we're gonna go ahead and go long, okay? As soon as we go long, we'll use this secondary line at 117.27 as our stop loss for the price, okay? Now, again, what I said about this at the first, the reason I like this is we're immediately going into this trade with a risk-reward ratio. We know that we're probably going to get in a rough risk-reward ratio. We know that if we buy this security, we're going to be buying it at 119.75, okay? We know if we get into that trade and it goes against us, and some of the trades will go against us, we're going to go ahead and get out of that trade roughly at about 117.27, okay? So if we subtract the value of 119 minus 117, roughly we're going to have 1.8 or 2.2, so somewhere between 1.8 and 2.3. Don't want to do the math. You'd want to do the math. But we know exactly what our risk reward is, okay? Or we know exactly what our risk is when getting into this trade. We don't know what the potential reward is because there are some ways that we can kind of go in and kind of trade this particular thing. And the way that this kind of works, I need to show you a trade that lasts a little bit of time so you know how to move the stops. But as long as, let's say this thing starts to go up and starts to take off, what we'll be able to do is kind of move up our stops to kind of take advantage of that larger term movement, okay? And let me see if I can kind of find a pretty good example of that on Monsanto. This is actually not a great example, but that's okay. What I want to do is kind of just basically, let's pretend, just for the sake of argument, that we started to kind of look at this security back in August, okay? And we'll kind of walk through how that would work exactly, okay? So in this particular case, I'm going to go ahead and kind of take a zoom view right here. Let's say we started to look at this on August 31st, okay? We are bearish short-term. In other words, this is still below zero, which is why I'm getting a red bar here. But we're bullish long-term. And we just got that change of momentum because the medium-term crossed up above the short-term trend. Okay, but we're not going to be taking a trade right now. We want to basically wait until our our short-term trade goes up above zero, which happens on this very next bar right here. Okay, so on this particular bar, this is the day we decide that we're going to go ahead and structure a long trade. Very quickly, what I'm going to do is I'm going to put the high right here. Okay, I'm going to put a low value or my low line right below this. And this is actually a better example of where I like to put my stop losses. I like to look for a pivot low. And if, in case you don't know what that is, that's a low surrounded by two higher lows. Okay, that's usually what I look for. I look for that as kind of a support area where it kind of went down, set a new low, and then the next day it kind of started to head up. So this is exactly where I'd be looking to kind of structure in this trade on this day. Okay, looks like we might have gotten in on the close on this day. Okay, well, if we didn't, we got on the during the day somewhere here. Okay, depending on how close our lines are together. And then all of a sudden we're in a long trade. Okay, now I'm going to walk you through exactly kind of how to kind of manage this trade, because again, Rahul's rules are very, very specific in terms of the way that this works. I don't see any questions, so hopefully you guys are not too tired. I understand it's been a long day, but if you do have questions, feel free to type them in. It also could be that it's a very simple routine, which is why I like to show it. It's easy for me to come in, start talking about MetaStock and kind of get you guys a little bit overwhelmed. The reason I like to show this is it's something that can work for you right out of the box, and it's something that's pretty easy to implement. So if we bought here, kind of look, we bought here, we put in our stop loss, and at that point we're just kind of in a holding routine. As long as it doesn't go down below our stop loss, we're going to go ahead and stay in the security, obviously. Okay. What happens is Monsanto does go up. It kind of as naturally after it goes up, it kind of generally comes back down. It came down enough to kind of trigger this sign of weakness or this change of strength to the downside, which is what's painting our arrow. And the reason that's getting painted on the chart is, again, the medium-term trend is crossing, the short-term trend is crossing down below. Okay. Now, when this happens on a chart, we're not actually going to do anything. Okay. What we're going to look to do is we're going to kind of start to pay a little bit more attention, because if this gets more bearish, in other words, if it goes bearish on a long-term basis, our RMO goes bearish up here, or a short-term basis, or both, we'll want to go ahead and reverse our trade, because all of a sudden our outlook on Monsanto doesn't look good. Okay. But generally, the market has a tendency to move in stair steps. It goes up a little bit. The bears come in, or the sellers come in. They push the prices down. It's a natural market rhythm. And so just because it kind of is starting to kind of slide back against us doesn't mean we want to get out of the trade right away. We want it to be confirmed by an actual change in trend, or a change in direction, or a change of sentiment. Okay. In this case, basically we set a new support area. Stock gapped incredibly overnight and issued a new buy signal. Okay, so when you have this change in sentiment, you don't necessarily want to get out, but you do want to start to pay a little bit closer attention to what's going on in this particular stock. Okay, in this particular case, stock didn't continue to go down much lower, hit a bottom, and actually gapped. What is that? A 3-point gap overnight? It went from about 119.9 to an overnight open of 122. Okay, which was enough of an upward movement to give us another buy signal on a chart, which is, again, the shift of the short-term trend above the medium-term trend. Okay, so now we've kind of set up a new area of support here. Stock's starting to go back up again. We get a buy signal on the chart. There's a couple things that you can do here. Okay, there's only one thing that I do, which is the most important thing. Okay, and usually, like when we have a little bit more time, what I say is, what do you think we would do at this point? Okay, but I'll just give you the answer. When the stock has set up a new support area, which I'm going to say is right here, where the lowest value here, and it started to go up again, what we want to do first of all is actually move our stop loss up. Okay, now in this particular example, I would probably put it right here. Okay, personally, this is the lowest value that it kind of, I'd actually put it a little bit lower. I like a little bit of white space under my stop losses, so probably put it just a little bit lower there. Okay, Rahul says you can actually buy more shares. I don't like to. I like to buy as many shares as I'm going to buy at that initial entry price. Okay, so now what I've done is I've gone ahead and I've made sure that even if the stock goes against me, or this trade goes against me, I'm going to lock in some profits. Okay. Again, I'm not arbitrarily setting stops based on what I can afford to lose. What I'm doing is I'm looking at what the market's actually doing, where it's setting up support and resistance to kind of move those stops. And I'm giving it just a little bit of room to kind of get me out there. Okay. In this particular case, Monsanto, that was the end of the upward move for Monsanto. As you guys saw when we were looking at the fuller, it just starts to kind of trail off here. Here we get a expert sell signal. Again, that change of momentum comes into the market. Okay. Here it goes red. Okay. And even if we waited, okay, until everything went red, which happened right here, right close to our stop loss, okay, we would have gotten out as soon as this kind of gave us everything red. We'd be looking to structure a short trade at this particular point. Okay. Now, this wasn't a very good long-term trend, but we were able to pull some money out of it. We got in here at the 117 level. We got out at 119. Okay. And so we made a couple points on it, nothing huge, but not all your trades are going to be huge. What I'm looking at from this particular stock with Monsanto is maybe it's not the best example to look at. Okay, we've had a lot of trades that have actually been very, very good, like USO. If we look at that, take a look at it, USO, just for a minute of the chart. And I want to kind of talk a little bit about how this can really help you with stocks that generally trend for a long ways. Just looking at this from a longer term example, because I don't have any time, but looking at USO from a longer term example, it's been bullish from a long term basis since the price was at 966. I actually took a trade on 966. That happened back in September. Okay. Since then, the price has risen almost 30%. It's gone up to about 1257. And if you'll notice, you know, trading with that trend, even without going through a trade by trade blow of this thing, well, we would have gotten long probably right here when it kind of penetrated this high area. We would have moved up a stop here. We moved up a stop here. We'd still be long with the stop right about here. And as long as this thing keeps going up, we're just going to keep moving our stop up. Okay. So I would argue that while this has moved up 30%, if we're only looking to take long trades during that trade, I'd make the argument that that's going to be beneficial for you. In other words, trading with the trend on stocks that have a general tendency to trend for a long period of time is going to be very, very helpful for you. Okay. Again, this is a system that I've used for years. I love it. The reason I love it is, again, what I told you earlier. Everything that we talked about is very, very 100% objective. It's not subjective at all. It gives you everything that you need to go ahead and get started. So, yeah, the stairs go up, Bill, the stairs go down. Yeah, that's right. So, MetaStock, as I told you earlier, and again, that's just a very small preview. I like to show that to you. MetaStock's probably one of the biggest toolbox in the market. Again, it helps you scan for ideas. You can scan on the RMO system if you want. You can scan all of the ETFs or all the optionables or all the Forex or futures that you're interested in. Come on, stocks that have an opportunity for you today. We have two versions of MetaStock. Both of them have been rated #1. The DC version particularly has been rated #1 for 24 years in a row. It's only $59 a month, and it comes with data. Okay, the real-time version of MetaStock is $250 a month, and that includes a product we won't show you today, but it's a very, very cool product. It includes a real-time news feed from Reuters, which is very, very cool. If you know who Thomson Reuters is and what they do, it includes their premium institutional news product. Okay, what we're going to do as an offer for you today is we want to be able to let you try out MetaStock in a low risk reward way. So what we're going to say is if you buy 1 month, we're going to give you 2 months for free. Okay. The DC version is an hourly updated version of daily charts. So you can go in and see what the market has done during the day. It'll give you an hourly update. The real-time is a full real-time streaming solution. Okay. So let's kind of do some math on that. If you try the DC version out just to kind of see how you like it, it's going to cost you $20 per month. Okay, and for that $59, you know, I can't believe it's January 2018. Seems like the older I get, the faster time flies. But you'll be able to use it February, March, and you'll be using it at $20 a month through April. What I want to do is I want to just let you try MetaStock. I want you to get your feet wet with it, because there's a reason it's been rated #1 for 24 years, and that's because it'll help you trade. Okay. So if you try it for 59 bucks, you go through all the training, and we do include training with it. We have a course that's called Unleash the Power of MetaStock, which is going to talk to you about how to test, how to trade, how to use the scanners, all that stuff that's available in MetaStock. If you don't feel like it's going to help you with your trading, then your real risk in terms of taking that offer is really literally 59 bucks. Okay. So to take advantage of that, metastock.com/LP. Okay, that'll take you straight to the 3-for-1 offer. Basically, all you have to do is provide what region you're interested in, whether it's North and South America, Europe, Middle East and Africa, or Asia Pacific. It'll get you started. Okay. If you kind of liked what you saw today, but you kind of want to get a little bit more information, or you have questions that I didn't see, give us a call. We have a friendly sales staff that can kind of answer any questions that you have. You can get a hold of them at 800-882-3040. And if you're international and you just want to chat online with us, or if you prefer not to talk to people and you just want to chat with somebody, metastock.com/sales-chat. So that's what I had for today. Again, I'd recommend you try it. The biggest thing that you've got to lose is 59 bucks and a little bit of time in terms of getting up to speed with it. So no, Michael, this is, thank you for your question, by the way. The $59, it's normally $59 per month, and that'll get you 33 months of access. After that 3 months is up, it's $59 per month after that. Okay. Thank you for your question, and thank you for your interest as well. Okay. All right, that's what I had. I'm going to turn the time back over to Renee. Thank you for sitting. Thank you for coming. I do want to wish you guys all a happy New Year's. I hope 2018 is awesome for you.